Hello everyone. Welcome to another video. If you are new on the channel, please consider subscribing to the channel, hit the like button and also feel free to leave a comment down below. In today's video we will talk about moving average crossover forex trading strategy. What is a moving average? A moving average is a technical indicator that market analysts and investors may use to determine the direction of a trend. It sums up the data points of a financial security over a specific time period and divides the total by the number of data points to arrive at an average. It is called a moving average because it is continually recalculated based on the latest price data. Analysts use the moving average to examine support and resistance by evaluating the movements of an asset's price. A moving average reflects the previous price action movement of a security. Analysts or investors then use the information to determine the potential direction of the asset price. It is known as a lagging indicator because it trails the price action of the underlying asset to produce a signal or show the direction of a given trend. In this video, I am going to show you how to use the following moving averages to design a trading strategy. 1. 10 exponential moving average. 2. 25 exponential moving average. 3. 50 exponential moving average. I know that you have seen many 2 moving average crossover trading strategies. But this one here is a bit different. You need to have 3 moving averages. Why triple moving average? Well, the added moving average helps avoid false signals commonly encountered in the standard MA crossover. We use the exponential moving average because the simple moving averages have more lag. The exponential moving averages have less lag and these are more suited for trading on shorter time frames. The advantages of this triple moving average forex trading strategy are simple and easy to follow. Easy to automate. It is a very profitable forex strategy in trending markets. For this strategy you can use any time frames and any currency pairs. Like I said before, for this strategy you will need 10 exponential moving average. This is the fast exponential moving average. 25 exponential moving average. This is the fast exponential moving average. 50 exponential moving average. This is the fast exponential moving average. Now let's see this trading strategy in real life. Buying rules. Step number 1. When the 10 exponential moving average crosses 25 exponential moving average, and then also crosses the 50 exponential moving average, then buy. Step number 2. Place your stop loss a few pips below the nearest swing low point. Step number 3. Use previous swing high points as your take profit target level or exit when the fast exponential moving average touches the medium exponential moving average, or exit when the fast exponential moving average crosses over the medium exponential moving average. You have to wait till the current bar candlestick has closed before taking the exit signal. Selling rules. Step number 1. When the 10 exponential moving average crosses 25 exponential moving average, and then also crosses the 50 exponential moving average to the downside, then sell. Step number 2. Place your stop loss a few pips above the nearest swing high point. Step number 3. Use previous swing low point as your take profit target level or exit the trade when the fast exponential moving average touches the medium exponential moving average, or exit when the fast exponential moving average crosses over the medium exponential moving average. You have to wait till the current bar candlestick has closed before taking the exit signal. Thanks for watching. Hope you guys have enjoyed the video and please don't forget to like and subscribe to the channel. I'll see you in the next video.